Well, this will be an opening to watch because that Dow has been sinking, down 200 points yesterday, on a roll to the downside consistently. And by the way, it's been led by Apple. So we're going to deal with the overall market. We're going to deal with Apple as this market opens up for trading this Thursday morning. Boom, here we go. It's 9:30. We're off. We're running. We're expecting to open lower. And we're down. Yeah, well, there you go. We're down 40. We're down 43. We're down 37. Okay, it's limited loss at this point. Down 50. Okay, that's about 1/4%, down 55. All right, now we're down 90. They're all opening up, and there's a sea of red, ladies and gentlemen, where the Dow 30, at least 25 of them right now are down, and the Dow is off 85 points. That's 1/3%. Show me the S&P, please. How much is that down? That's down nearly 0.5 percentage point. So we've opened up in the red almost across the board. Now, the NASDAQ, home of the technology companies, where is that? It is down about 1/3%. Got it. There's a bombshell article today in the New York Times, an investigation of Facebook. That follows through to the stock. It's down $1.38, 142 on Facebook right now. As we said, it's been a rough month for Apple shares. So far, the stock is very close to bear territory, but this morning, a tiny fractional bounce up $1.18 at 187. Big day. Scott Martin's here. So is Michelle McKinnon, Liz McDonald and Ashley Webster. First off, Ashley, update Brexit.
Yeah, fast-moving events in the UK. Now we understand letters of calling for a vote of no confidence in Theresa May are starting to come in from her own Conservative ministers. We know that the Brexit secretary has already quit today, saying that the deal that's been approved is fatally flawed and is being a classic example of the EU blackmailing the UK. The question is, can Theresa May survive this? She may be able to survive it. The biggest hurdle she faces is getting this deal approved by Parliament. If that doesn't happen, chaos ensues, and she could indeed lose her position as Prime Minister.
This is a fast-moving story.
Yes.
I think it's got something to do with the Dow Industrials down 188 points in 2 minutes.
Yeah. Yes.
It's got to be. Yeah. Trouble over there does hurt sentiment over here.
Think about the Brexit day, how much it hurt us.
That's right. Yeah. It did. Now we're down 175 on the Dow and 30 points on the NASDAQ Composite. Okay. Scott, come on in, please. You talk to me about Apple. How much? Where's the bottom for the price of Apple stock?
We'd all like to know that, Stuart. It's lower, I'll tell you that much, because, you know, here's the thing. I don't think Apple, from a fundamental standpoint, is say, overvalued here. It's probably about where it should be. But the issue, Stuart, with the markets is, and we've talked about this now, unfortunately, for the last 3 weeks, the markets psychologically are in a different position than they have been most of the year, in the sense that the market's very manic. They're very anxious. So to me, Apple's probably got to drop another $10 or so before the buyers are going to come in. The also problem is you've got a lot of folks piling on now. So it's not just the suppliers on the downgrades now. It's some of the banks, some of the analysts are coming in with all these famous price target cuts now when the stock has already dropped, 20, 25%. So once those start to wane and get in the past, that's when it'll be time for the stock to heal.
Well, we shall see. Well, we're moving quickly this morning. We're down 200 points on the Dow Industrial Average. That's 198. We're back to 24,800. That's where we are. I'm going to show you Facebook stock and briefly tell you that there's a bombshell series of revelations in the New York Times about that company this morning. It's not really hurting the stock that much, although Facebook is depressed. It's at 142 at the moment. That's down almost $2. Scroll up, please. I want to see what else we're dealing with here. Got to move fast. Higher sales and a rosy forecast from Walmart. And the Walmart stock, it's down a fraction. It was a very strong report, Michelle.
It was a very strong report, but at the end of the day, Walmart isn't going to be an Amazon. And I think this is not a growth stock. You buy Walmart because it's a safe company, you get a dividend, that's it. But what I really liked about Walmart is it's showing us how strong the consumer is, and I'm bullish because of that.
It's a cost issue as it ramps up to take on Amazon.
Okay, but same-store sales up 3.4%.
Yeah, and
foot traffic up in the stores.
Which foot traffic is huge.
Yeah. And a great Christmas season outlook.
Yeah, okay, but there's one small factor that is pulling Walmart down this morning. It's called, the overall market is not helping either. Yeah. Now we're down 160 points, about 160 points, 2/3%. Another earnings report came in this morning from J.C. Penney. Should we play the organ music? Probably. We're down 12%, $1.07 on J.C. Penney. That's what we got. Have a look at GE again. Should we play the organ music? No, maybe not. 8.34 on GE. I hear Scott laughing here. Would you buy GE at 8? Would you buy JCPenney at 1? Tell me, Scott.
Stuart, I'm going to use my famous line on that to make it definitive. I wouldn't even buy those two stocks with your money, okay? So, listen, and I do miss the organ music, but it's a sad state of affairs, really, to think about these two companies that were once leaders and stalwarts in our economy that are now being so hurt. But to Michelle's point, there are other companies taking the lead. Walmart and Amazon are two that come to mind.
America changes real fast, ain't that the truth? Look at Snap. They've revealed that they were subpoenaed by the Department of Justice and the SEC for information related to its IPO disclosures. The stock is down only 4 cents. That's a half percentage point.
The stock's been cut by more than half.
Exactly.
That's true.
What did it IPO at?
Yes. What did it IPO at? I can't remember.
More than 12.
More than 12.
19?
19?
Yeah.
Oh, that's chopped off at the knees. How about the price of oil this morning? I think around $56 a barrel. That means no serious bounce back from the lows earlier this week. But we are still seeing the price of gas keep falling. We're down to $2.66 as your national average right now. 36 days down straight. Now, we're going to get the latest read on the supply of oil. It comes out at 11 o'clock this morning. So, Scott, what do you think? Are we going to head down on the price of crude, down from 56?
Yeah, the supply number probably doesn't mean too much today because oil's in such this downdraft. There's some trading rumors going on about hedge funds, getting caught, say, long oil and short natural gas, and the trade going the other way, and that's really wonky. But things happen in the trading markets that, say, override fundamentals at times. So to me, those trades need to wash out, Stuart, and that probably takes another week or two and another few dollars downward in price.
All I want is cheap gas.
Well, and you're getting it right now. The inventories for oil have built 7 weeks in a row, and we're expecting another build of 3 million barrels in this report. If that doesn't happen, we may see some upward movement on oil, but if it exceeds that expectation, it could put more downward pressure because we are sloshing in oil right now in reserve, which may be a proxy for a slowing global economy, but either way.
And the U.S. is now a net exporter, not a net importer. It happened this October, so that changes too.
That does.
We are a net exporter of energy as opposed to just oil. Is that correct?
I don't know about energy. Is it energy? I know it's for sure oil.
Energy as well.
Wow, well, that's really changed, hasn't it?
Yeah.
On the very day that the incoming chair of the House Financial Services Committee, Maxine Waters, has a go at the banks, bashing them if any way she can, Warren Buffett bets big on J.P. Morgan. $4 billion stake just revealed in J.P. Morgan. Michelle, that's a vote of confidence in the banks.
100%. And I think the Maxine Waters is a little bit of political rhetoric. And I would always put my money in Warren Buffett's hands and not in Congress's hands. So I think it's absolutely a vote of confidence, Stuart.
What do you got, Liz?
Basically, it's adding to his positions in Bank of America and Goldman Sachs. This is an indication Warren Buffett thinks that the economy will go on continuing on a strong path, that the economic recovery is going apace.
Well, there's a vote of confidence, I'd say. All right. Netflix, they are testing a cheaper mobile-only plan in Malaysia. Let me interpret that, Emac. I think that means that, that Netflix is trying to figure out how to get you to watch movies on your phone.
Yes, that is correct. And we've already been reporting about how more millennials are watching movies on their mobile devices, not just phones, but also iPads and the like. So it's an interesting development here that Netflix is testing out.
I watch soccer on it all the time.
But I remember saying on this program, oh, I'll never watch a movie on a little tiny screen like that. I can barely see it. I can barely see it. Now I'm hooked, totally hooked.
Yes.
Right. Pacific Gas and Electric, PG&E, California utility, hammered. The stock been hammered over its possible liability for the California wildfires. Got more on this?
Yes, because the state of California did say you will not, utilities, have to face the blow of liabilities for 2019 fires, 2019 fires going forward. The 2018 fires are a risk to PG&E. Citigroup is already saying it's facing upwards of $15 billion in liabilities for the Camp Fire, the Northern Fire alone. The ratepayers will pay anywhere from $75 a year annually to $150 a year, the customers. So they're going to borrow bonds and then pay it off, borrow bonds to pay the liabilities and then pay off the bonds over time by increasing ratepayers, consumer costs.
The customers pay.
The customers pay like maybe $150 more a year.
And the stock's looking real bad. It was down yesterday. It's down another 15% as of today. $21 on PG&E. It's that time, I'm afraid, ladies and gentlemen. Have to say goodbye to Scott and to Michelle. Thanks for joining us, one and all. Appreciate it. It was a big day, wasn't it? All right, well, we've come back a bit.